hope is bogus emotion that only costs you money. You need to know very well when to move away or give up the loss and not allow the anxiety to trick you into trying again. The market is a device for transferring money from the impatient to the patient. Trade what's happening, not what you think is going to happen. The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. When I get hurt in the market, I get the hell out. It doesn't matter at all where the market is trading, I just get out, because I believe that once you're hurt in the market, your decisions are going to be far less objective than they are when you're doing well. If you stick around when the market is severely against you, sooner or later they are going to carry you out. When you genuinely accept the risks, you will be at peace with any outcome. I think investment psychology is by far the more important element, followed by risk control, with the least important consideration being the question of where you buy and sell. All the math you need in the stock market you get in the 4th grade. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. I know this will sound like a cliche, but the single most important reason that people lose money in the financial markets is that they don't cut their losses short. I have been trading for decades and I am still standing. I have seen a lot of traders come and go. They have a system or a program that works in some specific environments and fails in others. In contrast, my strategy is dynamic and ever-evolving. I constantly learn and change. You never know what kind of setup market will present to you. Your objective should be to find an opportunity where risk-reward ratio is best. Many investors make the mistake of buying high and selling low, or the exact opposite is the right strategy to outperform over the long term. Never confuse your position with your best interest. Many traders take a position in a stock and form an emotional attachment to it. They'll start losing money, and instead of stopping themselves out, they'll find brand new reasons to stay in. When in doubt, get out. The core problem, however, is the need to fit markets into a style of trading rather than finding ways to trade that fit with market behavior. Stock price movements actually begin to reflect new developments before it is generally recognized that they have taken place. The only true test of whether a stock is cheap or high is not its current price in relation to some former price, no matter how accustomed we may have become to that former price, but whether the company's fundamentals are significantly more or less favorable than the current financial community appraisal of that stock. In trading, everything works sometimes and nothing works always. The desire for constant action irrespective of underlying conditions is responsible for many losses in Wall Street.